please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's move on then. There's some more news flow coming through. A recent move by IRDA has allowed private equity players to own over 10% in insurance companies and become promoters. Here's a chat that Yash Jain had with the chairman of IRDA. Hear him out.
So IRDA very recently allowed private equity players to own more than 10% in insurance companies and become promoters, of course, through SPV and a particular lock-in period. What kind of interest since then have you received, have you heard from private equity players? And if you could tell us, which are these big private equity players which have shown interest, and how do you see this going forward?
Obviously, I will not be able to name the equity players who are saying, but I am finding generally more interest from them to study what's happening in the insurance industry, tech players. Yes.
So we could see some of the big deals.
Yes, some of them coming in, yes.
The IRDA very recently had asked LIC to pare down its stake in two specific companies, L&T and ITC, to 15% as per the mandated rules. Do you still stick to that 2-year timeline which was given to LIC, or has there been any change to it, sir?
Over a period. We are not fit as timetable because 15% is there. It's risky, and looking at the we keep on looking at exposure norms. Yeah.
So under your tenure, one very big insurance deal could not go through. That was HDFC Life and Max Financial deal because of the Section 35 of the Insurance Act. Do you think certain sections of the Insurance Act need to be revisited, need to be amended so that more M&A mergers can take place and the space can become more attractive?
No comments on this, because especially when you are mentioning company's name, I wouldn't be able to comment on it.
But certain sections, do you think need amendment without naming any company?
I don't think anything needs amendment for it, no.
Okay. So the two government schemes, Pradhan Mantri Jeevan Jyoti Bima Yojana and Suraksha Bima Yojana, of course, the first year was excellent for insurance companies, but the numbers since then are falling. Now, the finance minister has reiterated emphasis on these two schemes. What, according to you, were a couple of hiccups which the first phase of implementation got, and now in the second phase of implementation, what would you want the government to focus on for a better and aggressive coverage?
See, it is a continuation of account opening, zero balance, Jan Dhan Bima, Jan Dhan account, etc. Right. Continuation of it has come. Some focus has to be there because there is inherently there's nothing wrong in these schemes. Maybe the price tweaking has to happen, something as per the actuarial experiences, actuarial calculation. Some focus has to come, that will come automatically. This was the first year. 300 rupees and 12 years first. We had an experience of that thing. Actuarial experiences must have come, predictions must have come. Right. As per that, revision of premium is inherent in any of these insurance contracts, especially short-term contracts, 1-year contracts. Right. Depending on it, some revision may be required.